What a wild week. Going to talk about Tesla today and a couple of killer trade setups that are just amazing. And let's get right into it. So let's talk about yesterday's short situation, actually the day before, and what happened. So what kind of happened here is, let's scroll over here to the back. Okay, and let's talk about this crazy move over 900 on Tesla. Monster short squeeze, and kind of like what happened here at the open. So the folks who got short here at the open, they did the right thing. I mean, in general, at the open, you on a big gap up like this, you want to get short, right? But you can't be patient if it comes back. So it dumps fast, 50 points or whatever it was, and it starts coming back up. You got to cover, right? If it's not staying heavy underneath the VWAP line, you got to cover. So what happened here is the initial shorts that loaded up here came back up, broke high day, and there's panic. Well, there's one FOMO buying and short covering, and that gave us the spike here. But then here's the trick that they do, and they being the market makers or the folks with big money trading something like this, is that so it comes here, comes down, starts getting lower below VWAP again, and then people start shorting right here, right? And that's the trap. So you get short, you still have, these people are getting short. Meanwhile, there's people here buying, a lot of interest, thinking that this is going to 1,000 plus, right? There's a lot of call buying, looking for 1,200, 1,300, all kinds of crazy stuff happening. So with this, VWAP was recovered, right? And so it's now grinding here at this point. And then what happened is, as it got higher, you got a little more FOMO buying, and it breaks high a day, and you got short covering for all the people who are short here. High a day break, maybe it's going to 1,000. What you do have to think about here is look at the volume, right? You have 4 million shares here, you have 3 million shares here. There's a fair amount of volume, 10 to 15 million shares here, right? So if you were short here with, say, your 1 million, 2 million net shares, or a bunch of people are trapped short here, from this level and this level, there's 2, 3, 4 million involved right here. And say that you've got 5 million shares you want to get rid of. And you're in from, say, 600, maybe even 300, but let's just say 600, right? And you kind of had planned on this whole short squeeze. They took this, I mean, this is a playbook, this is like out of the playbook from small cap world. I'm really amazed that they did it and accomplished it with Tesla on a stock this size, this size of a cap. It's incredible, really. But anyways, here's what you gotta think about. So you got 5 million shares here, right, in play. And now let's just say you've got 5 million shares that you bought at 600. And if you wanted to start unloading this because it's gapped up, it's got to 900. And if you start unwinding all of your cells here, and you start unloading your 5 million or maybe more shares, by the time you finish unloading, it's probably going to end up being back around 725, 750, maybe even 800. 800. Let's just say you can average and exit all of your shares around 800, right? Well, a few things. One, if you unload it all at once and you get a more than 10% change, right? So that 900, it gets down to 820 real fast. They don't want that. Like it hit 830 from this open night. Like if it did more, that's 80 points. If it did more, it would have halted. And then when it unhalted, it might have opened at 725, right? Because of this halt. And so you want to kind of avoid that kind of an event if you're trying to unload your shares, right? You don't want to sell right here. You want to sell into strength. So what they did was they trapped the shorts right here. And they did this grind. So now why would you not want to unload, right? So look at this stock, right? If you had 5 million shares, right? Actually, let's just say 1 million shares, right, in this game. 1 million shares, if you unloaded it at an average of say 800 or 750 versus unloading 1 million shares at say 925 or 950 up here, that's a difference of $200 million, maybe $100 million, depending on what you're looking at, right? That's a big deal. So if you've got the capital to manipulate and buy and keep this up so that it'll trigger some sort of a short squeeze, then what happens is you get the short squeeze, push, and at the end of the close, you unload into that. And you've got basically FOMO buying right here. You have short covering buying happening right here. Now you can be a rock star. You just made for your investors another $100 million or $200 million by doing this technique for squeezing the shorts. So this failed, right? So now we have the short. This is the first sign of actual unloading, right? And that's a pretty big unload right there. And so now we have this, we have a dump. In pre-market the next day, it gets below the previous day's lows or previous day support that was here. It pushed and tested that again. They were selling, came down here, selling, and the next day it opened and we had nonstop selling, right? So people are like, okay, after that big dump, they're like, hey, I want to take gains, right? And shorts are also loading up, right? Because they're like, hey, this is the first real signal, we're done. So day 2, we're going to jump more. So you load up short. We had some dumpage basically, and all day long. Any push up, dump, met with selling, all the way down into 700. Now, if you saw my tweets earlier, I had targeted the 760 level, which is where it came right down to. From here to here, there's no volume. So it was from my volume profile. You can see right here that from this point down to the 760 is actually the chart looked different from before today's action. It was much more clear about where the selling would and where the volume gap was. So that was pretty nice, clean targeting for that drop. Then it pushed, failed, and we got more selling yesterday, and we based on 700. So when it comes to trading and having trade plans, being aware of the short squeeze right here, one can get short for overnight. 2, then the following day, you can assume that there might be second day of selling, but you have to risk to this line right here, like this 875, where the previous day's support was. And it's a good risk reward, right? Because you had such a big move, you're risking basically like 50 points here for maybe 100 to 150 points of downside, right? So you get short 850, risk to 900, and you get paid. Drops down to 700. 3-to-1 risk reward ratio. Okay, so got this dump. Then you're thinking, hey, day 3, right? It came from 600. So everybody's eyeballing at least a wash down, a dump to 600, and it actually came from like 400 where it broke out. So the people who are short are going, hey, we're gonna have day 3 selling, right? And what happened, right? So this trick here is let's actually change the time frame. I like to use a 3-minute chart. Previous support and resistance right here, right around 710. You can see here, you can use, even if you want to go, you can see that use this previous support right here. Came over VWAP, dumped, and then here, let's take a look at what happened with the open, right? So normally, we're thinking, people are thinking it's going to dump more. So people get short. They load up here some more, thinking it pushed up on 710, we get short, dump 690, and then it pushes. And then it goes back up, tests the 710 area, fails, so you get short again here, right? Thinking, okay, we're gonna have this follow through dump here, and you can risk to the 710, right? So now this is all good. Everything's working out. We've had some selling going on. We're testing the lows. Great, right? I had a short plan here too, and got short, but I had to cover here. I covered when it was not breaking down and breaking this previous low. Then I waited to see what it was going to do. Was it going to just kind of hang out here for all day and then dump, or is it going to? I had in the back of my mind that 700 was where I was kind of thinking, hey, this is where I think it should bounce, or may even be the low for Tesla. And so having that in my back of my head, I was kind of prepared that what would happen if we broke high a day, right? The 710 area. And you got to think, this just did 200 plus points, 990 to 700, or 680, right? So 980, let's just say, I think we were 980 the other day. Yeah, so we did have 300 to 200 points drop, right? There's going to be some. It's totally normal for there to be some sort of short covering after that kind of a move, right? And so you got to be prepared that you can't assume that it's just going to do another 200 points straight down. So you got to have that in the back of your mind. And then what did we have happen? We had this grind come in, started grinding, and you can then go, oh, it's going to break out high day. This is where you can get long, and you can basically get long here, 710 or so, anticipating this breakout, and you're risking what, 10 points, 710 for 50 to 100 points on the upside, right? That's a good risk reward, even the 50, right? So you're risking 40, so you're risking 10 points to get, say, 40 to 60 points, right? So that's great risk reward. And there's a high probability of a move up because we just dropped 200, 300 points. It's reasonable. You drop 200 points, it's reasonable to see a 50-point pop just on short covering. Just a rule of thumb I kind of like to use. So we then, what happened there? It's exactly that, right? You had short covering, you had popped and moved right to the area right here, 780, right? So that's what I wanted. This technique and this play setup I wanted people to be aware of is that when you have big gap downs, you've had a lot of momentum of something that's moved up with a lot of range, and something's come down with a lot of range. It's normal for it to move higher, and so what you can look for is this setup. Here's all you see. Okay, let's talk about that first few minutes. And I wish this chart looked a little bit better, so you can see it better. But you can just draw a line right here, and that's going to be the trigger. So as soon as it crossed, you can load up, get long. I like to use a 3-to-1 risk-reward ratio. So if I'm getting long at 710, risking to 700, whenever it gets to 740 or so, when we know there was some activity around 750, 760 yesterday, and so you can assume it's going to go to that area and test that area. And as soon as it's going to get there, I'm going to start selling. And you make good money that way, right? So you risk 10 points to make 50, 60, 70 points on this into this spike. And that's great work, right? Like imagine this. So you can use that with anything, any small cap, especially in small caps, you get these kinds of crazy moves. And it's percentage based, right? So yes, it moved hundreds of dollars, but that's no different than a $7 stock moving to $9. We've seen that happen, right? This is why it's surprising, is because this is such a large cap company. You don't normally see moves like this, and that they were able to accomplish it was pretty amazing. And so anyways, here that's just all I'm going to go over with you guys is how to play this kind of a gap down, the morning breakout, and then make bank. All right, everyone. Thank you for watching this video. And remember to retweet and tweet back to me about whether or not this was helpful. Thanks again for your time. Take care.